Welcome to Dual Edge Research. Different markets, one research philosophy. We believe successful investing isn't about predicting the future. It's about consistently identifying higher probability opportunities through objective, data-driven research. That philosophy drives everything that we do. Whether we're analyzing thousands of stocks or hundreds of thousands of commodity spread combinations, the process is always the same. Filter, rank, select, execute, repeat. That research powers two specialized newsletters. The Bull Strangle newsletter applies the research process to stocks and options, identifying high-quality companies for systematic option income. The Smart Spreads newsletter applies the same discipline methodology to seasonal commodity future spreads. Through research into seasonality, historical performance, forward curves, and trade selection, our goal is simple. Identify higher probability opportunities backed by objective historical data. Today we're focusing on smart spreads. Let's begin. Over the past 4 videos, we've built a commodity spread one decision at a time. We've explored whether history favors buying or selling, when seasonal opportunities have historically performed best, which front-month contract cycle has delivered the strongest results, and whether a 2-leg or 3-leg structure has historically produced the better trade. All of these decisions have one thing in common. They're based off of historical research. But before a trade earns a spot on the Smart Spreads watch list, there's one final question. Does today's market support the historical opportunity? That's where forward curves become an essential part of the research process. So what is a forward curve? A forward curve is simply a snapshot of the futures prices across multiple contract months. Some markets trade in backwardation, where nearby contracts are more expensive than deferred contracts. Others trade in Contango, where deferred contracts trade at higher prices than nearby deliveries. The shape of the curve reflects today's supply, demand, inventories, storage costs, and commercial expectations. In other words, it tells us what the market looks like today, not what it looked like historically. Rather than treating the forward curve as a market opinion, we turned it into another research filter. For every historical trade in our database, we measured the forward curve on the day the trade was entered. Then we grouped similar trade structures and analyzed how spreads performed within each environment. The results showed that many markets consistently perform better under certain forward curve conditions. That allows us to compare today's market with the environments where a trade has historically been most successful. Imagine 2 seasonal trades with nearly identical historical performance. Both have strong average returns, both have high win rates. Without additional information, they appear equally attractive. But suppose one trade is occurring under a forward curve that has historically supported the seasonal edge, while the other is not. That extra piece of evidence can help separate the stronger opportunity from the weaker one. Instead of relying on seasonality alone, we now combine historical performance with today's market structure. This is one of the biggest differences between traditional seasonal analysis and the Smart Spreads methodology. Traditional research asks, what has worked historically? Smart Spreads ask an additional question, does today's market resemble the environments where history has been most reliable? Every layer of research adds confidence before a trade reaches the watch list. We've now explored 5 major decisions involved in constructing a higher probability commodity spread: direction, entry timing, front month selection, leg structure, and forward curve analysis. In our final video of this series, we'll bring everything together. Starting with more than 500,000 historical possibilities, you'll see how each research filter narrows the field until only a small number of the highest probability opportunities remain. Thanks for watching. If you enjoyed this video, visit bullstrangle.com for additional research, education, and the Smart Spreads newsletter. For a deeper dive into commodity spread trading, be sure to check out my book, Trading Commodity Spreads, which is available on Amazon. We'll see you in the next video.